Should I go with this wild hair or should I tie it up?
No, let it flow. Come on, it's the flow show. You need to be flowing.
What's happening, everybody? This is the Flow Show. You got Steve Strazza, you got Sean McLaughlin. I want to address the number of elephants in the room right off the bat. Number one, Strazza's haircut looks damn sexy. Number two, my hair looks ridiculous, but I'm hoping to have this out here to distract you from this terrible blemish I have on my nose right now that Steve, right before we went live, just made me feel incredibly self-conscious about. I'm treating a little skin condition here. By this time next week, it should look normal again. But if it's bothering you, just look away, okay? I apologize. So we got that out of the way. Now, first up, Strazza, I know you got a shit ton of stuff you want to talk about, and I know you're very excited. You're wearing your bull market shirt today, by the way.
Yep.
This is very exciting. But before we get to all your great stuff, we don't do this often, Strazza. We don't pat ourselves on the back a whole lot. But every once in a while, a nugget comes out of these flow shows. And last week, man, I really feel like we hit it out of the park. We were talking about Coinbase. I got it up on my screen right now. This is just a daily chart or intraday chart today. Let's pull up a longer term chart, see what we're talking about. We were talking about Coinbase right down here around 31.55, somewhere in that neighborhood. We were talking about buying June 75 calls last week, calling it kind of a long shot trade.
Yeah.
Steve, you bought them at 280. You've more than doubled your money in less than a week. Yeah,
they were trading at between 5 and 6 today. They're probably closer to 6 right now because the stocks kept ripping. Listen, it's nice. We get lucky sometimes. Timing with that one was very much on our side. I was looking for a little scoop and score, failed breakdown, hook higher. We say it all the time, right? From failed moves come fast moves. Doesn't happen like that every way, and it doesn't happen right away all the time. So this one's really nice, paid us right away. I ended up buying second half of my position, kind of chased it a little bit, I think last Thursday, exited half of the position today at about a double. And that's what we want, right? Because now I have a free ride and I have all the way until June. And I don't care. The stock.
I love it. I love it. Look, for those of you who might be tuning in for the first time to the Flow Show, let me catch you up on what we try to do here. This is a unscripted, improvised show where we dig into unusual options activity and see if that leads us down a rabbit hole into some trades. And you can get to see a little bit of how the sausage is made between me and Strazza, how we come up with trade ideas here at All Star Charts. And you know what? In that format, sometimes it's just a bunch of garbage, but every once in a while we come up with a beauty idea, and man, last week we crushed it.
Yeah, and I mean you're the one who located those specific contracts. I was just in the comment. So that was a really nice kicker to put on. When you're right like that, you never own enough, right? I just bought a couple contracts, not much at all.
Much credit to you, Strazza. You actually put the trade on. I did not. So sucks for me, but you know what? It doesn't suck for me totally because I know now that next time I see you, you're buying me dinner. So it works out well.
There you go. You got it. But the bigger point is that it's a bull market and these kinds of setups are starting to work, right? We were just buying. Coinbase is one of the cycle laggards. We're buying some of the worst looking stocks on failed breakdown. So the failure of bearish patterns to resolve lower and then hook higher. So everything's working. The leaders are breaking out, making new highs. The worst stocks are failing to break down and are now hooking higher, making new short-term highs. It's really coming together. And I think we have another YOLO opportunity in some junky stocks today.
Man, you're putting me in an awkward situation here, Strazza, because I hate giving you praise, but I have to give you praise one more time here. And that is last week, you were calling this like time to be aggressiveness. You kind of, in a fun way, in a private meeting at All Star Charts, you admonished me in front of the team. Said, Sean, you're not being aggressive enough. We got to go for more aggressive plays. Like that play that you're talking about, that's fine, but no, man, we got to go harder to the paint. And hey, you called it last week, and so far it's playing out exactly as you called it.
That's my role on the analyst team, right? JC likes to joke, like if we were a risk spectrum, I'd be way out here with the junkiest stuff. I'm like the high yield bonds, right? And we have some other guys who are more like treasuries, right? I think you fall more towards the left side of that curve.
Are you calling me boring? Is that what you're calling me?
No, I'm just saying risk preferences. I lose a lot of money on a lot of these trades. So it feels good when you hit one out of the park like this. And you need big winners because if you're trading, some sort of short-term option strategy, your win rate's going to be 20 or 30%. So you need to really double, triple on your winners to make up for that.
Hey, I'm so glad you said that. And we talked about this a little bit on the chart report spaces this morning. By the way, shout out to the chart report new spaces. Is that going to be a regular thing on Tuesdays?
Yeah, public service announcement. Great point. So every Tuesday at 11:30, we'll be doing a spaces. I'll be there. Sean will be there a lot. Ian will be there. Other guys from the team will be there. Our friends will be there. Hosted by the chart report. So that's awesome. Every Tuesday at 11:30.
Well, so as I was going to say, on the chart report this morning, we were talking about proper risk management and risk size and position sizing and all that. And so I'm glad to hear you add that point you just made about how, look, sometimes when you're trading options and sometimes when you're taking long shots, you're going to have a high percentage of those trades not work out. You're going to lose money on most of those trades. So you need the occasional big ass winner to make it all worth it. And if you're willing to sit on your hands when you got one, which is hard to do, by the way, I'm not saying it's easy. It's very hard to sit on your hands when you got one by the tail. But that's how you play that game when you're going for those types of long shots.
Keep the losses small. Like with Coinbase, I already got stopped out of this trade once. This is my second time at it. Right. So don't ever hesitate to put on the same trade more than once, because failed moves, false starts, they happen all the time. Don't let that deter you. If you really like a setup, keep it so that you're only risking 5-10%. Keep your stop really tight, and you can keep swinging and keep taking shots. For me, it's totally emotionless. I care less that I lost on Coinbase a month and a half ago. Put the trade right back on. It means nothing to me.
Kudos to you, my man. Your year's off to a good start. It's nothing but downhill from here. No, just kidding. So, all right, you got a lot of stuff you want to talk about. Let's get into it.
So, where better to start than let's just jump. We had a lot of interesting bullish flow on last week's list. So just looking down the list, KB Homes, we like the home builders. A lot of junky stocks like Rocket Mortgage, Lyft, Uber, ChargePoint. When I say junky, I mean growth stocks. I mean cycle laggards. ARK really stands out. We'll talk about that in a minute. But we have two secular leaders also on the list from strong groups, large cap defensive names. First is Monster Beverage, MNST. What a chart. Look at it in a second. The second is Boston Scientific, BSX. Both breaking out a really nice basis. Here's Monster, got, year and a half, almost 2-year base, resolved higher, high and tight flag. I think you could buy this all day. This is the relative trend. We talk about secular leaders. If I were to zoom out on the relative trend for Monster, things been outperforming consistently forever. It's just a really good looking chart. And then I want to show you Boston Scientific quick. How about this base?
I like that one. That's a monster. Well, the last stock was a monster. This is a monster base.
This is the same thing you're going to see when you zoom out on charts of any big pharma company. Bristol Myers, Pfizer, Merck, not any, but a lot of them, right? And if you look at Merck, I think it's giving you a good kind of roadmap for where this could be headed, because Merck's already resolved higher from a very similar base.
Ooh, well, Boston Scientific looks great, especially if you are an investor, right? If you have a longer term time frame, this feels like a great opportunity to start, building a position, something you want to hold for multi-years. From an options trading perspective, I need a little bit more of an active trigger to get into it and look for a move, like a quick move.
Yeah.
Do you see that shaping up here or no?
You need a shorter term chart, right?
Right.
I think I didn't bring along a shorter term chart. You could zoom in and there's still like a multi-year base there that goes back to the pre-COVID highs, right around that 46.25. So you could buy the breakout of that base. But I think, tell me what you think about this. For huge basing patterns like this that could take some time to leave the station, you got to do leaps if you're going to put an option strategy on it, right? You really need to give yourself time, go way out, and play it in a way that if you do get the resolution, you're betting on some sort of, nice leg higher. So out of the money, go far out. Is there any other kind of strategy you could use for this type of pattern?
Yeah, the only thing that comes to mind, and I don't hate the leaps idea. I would like, if you're looking at my chart here, implied volatility is here on the bottom. I would like implied volatility to be a little bit lower. It's not onerous here. But I would prefer it being down at the lower end of the thing. But what comes to mind to me, Straza, is if I want to play Boston Scientific with an options strategy, knowing full well that a trend might take some time to develop. Maybe a good way to trade this is with a calendar spread, which, by the way, coincidentally, we have a calendar spread going on Monster, MNST, that we just talked about a moment ago. But a calendar spread, a bullish call calendar spread in a stock like Boston Scientific right now might be the play, because think about it. It's trading at 46 right now. 48 would be signaling like at least a short-term breakout. That might be the trigger we need for this thing really to start moving. We can maybe look at, say, the 50 strike and go out. Let me bring up the options chain here. We are in January now. So let's say we look at like the March options. The 50 strike calls. Ooh, man, that is cheap. Do you see that? You could buy 50 strike calls in March for 60 cents. Are you kidding me?
It's a low volatility name.
That actually changes my tune on this a little bit, because I was thinking we might be able to get at least $1 or more for these calls. I was thinking we sell these March 50 calls and then buy like the January calls, which is like a year out from now.
On a premium.
Yeah. So maybe a calendar spread is not the move. I stand corrected.
So you're just saying that because premium is so low, maybe leaps do make sense, right? Maybe not. Maybe you don't want to sell premium in something like this.
Yeah, I mean, let's see here. If the furthest we could go out, if we were looking at leaps, we can go out to January of 2025. So that's 2 years from now. And if we just want to anchor ourselves to that 50 strike, just because, I mean, we could get them for probably 750, which feels like a lot, but I mean, what is that, Straz? Like a 14% move from here? That's not that terrible.
I would want to look at, hold on. So Merck resolved higher from a base. And if you had leaps in Merck, right, betting on the same exact type of pattern. So if you put leaps on Merck, right, also very low volatility stock, broke out of its base at around 90. It's trading at like 110 today. So it's already picked up like 25%. If you look at that chart. Yeah. And that was October.
All right. You're starting to convince me. Boston Scientific going out all the way to January 2025. We could buy the 50 calls. We could pay $750, maybe a little bit more. And for those calls to pay off let's say we held it to expiration. We didn't do anything, right? And we threw it in the book, closed the book, didn't even open it for the next 2 years. And if we open it up 2 years from now, Boston Scientific would have to be north of, let's say, $58 for these calls to pay. So $58 from here is what, 20%? 22%? Not even. Which 22% sounds like a lot, but not when you got 2 years to get there.
Oh, you're right. It's about 20%. Yeah.
All right, Straz, I'm starting to come around to this idea.
Yeah, so we would need 58. That would be 25% from here. Listen, Merck's done that in a couple months coming out of an identical pattern. So yeah. I hate it. I don't hate it at all. Do you want to move on?
Yeah, let's move on. I'm making a note. Here's my pen. I'm making a note about BSX. I may come back to that later this week for a trade.
Let's talk about ARK. So we got ARK.
Again, we still got to talk about this thing.
ARKK. They were hitting the 34s this week. Yeah, I love this. Going out, January 20th, 34s. Look at that. I mean, I think this is very tradable. Am I crazy?
Well, it's got one of those beautiful oopsies that we like.
Yep. So similar pattern to Coinbase, slipped below the lower bounds, looked like it was breaking down. Now it's hooking higher. I think this thing runs right back to the upper bounds of this range. Probably happens a lot faster than people are ready for. And
boy, I'll tell you, Straz, the combination of ARK doing what it's doing right now, and the crypto stuff we've seen over the last 4 or 5 days, including the weekend, that's starting to tell me that risk on is really starting to find an appetite again.
I'm writing a post tomorrow. It's a great point. A lot of people are talking about like risk appetite indicators and how a lot of these ratios are looking good. And you can easily say a ratio could look good just because it could be driven by weakness in the denominator. That's fine. But you don't need to look at intermarket charts or ratio charts to see evidence of risk appetite picking up in this market. Look at the absolute trends. Look at copper. Look at crypto stocks. Look at what the altcoins did this weekend. These things are going crazy. So there's a number of different things we could look at that we don't need to use ratio charts for, where we could say risk appetite is really taken off right now.
Yeah, it felt like we were the only people noticing this maybe 3-4 weeks ago, and it's catching on. Feels like it's catching on.
Yeah, we're hearing all the breath thrust stuff coming out this
I
week.
think I saw somebody tweet about green shoots today.
That's yours. You're the green shoot guy. Love that. All right, let's look at a component of ARK that has much better defined risk level. So here's Pinterest. This is an ARK stock. We took a shot on this one earlier in the year. I think you put a trade on this. We put a couple trades on it last year. It looked good. So look in the lower pane here. This is Pinterest relative to social media stocks. When social media stocks were still cratering, Pinterest was basing, relative to its peer group, started working higher. So this is now a leader within its group, and social media stocks have totally turned around. They're trading at new multi-month highs. I think they're at their highest level since last summer. This is one I think that would be a great vehicle for expressing a bullish thesis on that whole space.
I find it interesting that the back half of 2022 there, Pinterest, the stock itself was more or less going sideways, but the relative strength just kept climbing and climbing and climbing. That's like the hidden little signal that, hey, something's going on here.
Right. Yeah, you see that relative trend bottom ahead of the absolute trend. Gives us a nice heads up.
That is a Straza. That's a chart I actually like a lot for a short-term trade.
Right? You know what your level is.
I mean, if we, I'm splitting hairs here. I mean, it's probably good to get in now, but maybe if I wanted just a little bit extra confirmation, maybe see a break above 27 and a half, which is like last week's high. I mean, I think it's probably good to go now, but if I wanted to be conservative and wait for some proof, more proof than we already have, I think 27.50 is all the signal we need to get in for a tactical trade here.
Yeah. I mean, like you're saying, I think you could jump it. This is what the second, third, fourth, fifth test of this level. More times the level is tested, the more likely it is to break. Breakouts are finally sticking. These stocks are working higher. We just talked about ARK, right? And what's going on at the index level for these types of names. So I think you could kind of err in the direction that this does resolve higher and just get in here. Also, this is a bearish to bullish reversal pattern that hasn't even completed yet. This thing's been basing for almost a year now, and it's just getting ready to resolve higher. This is like the first move up the right-hand side of this base that's probably underway. Probably get a pretty strong leg higher.
Yeah. Well, I'm looking at the options chain here in May.
Expensive, right?
It's not cheap, but it's not terrible. I mean, we could buy. Let me flip over here to my chart real quick. The 1 year high is 33.79, but that's probably a bad. I mean, it's not bad, but it's it's just because highs previous are just off the screen. But the 34 strike calls in May are going for about $1.45 right now. That's not a terrible price to pay for this stock. Like if this stock does follow through and break over this support or this resistance level here, I mean, 34 is, easy. That can be done in a week. I mean, especially in these types of stocks. I'm not saying it's going to happen, but at the very least, I think this would have one of those situations where if we just bought the calls, we would have a very good opportunity to at least sell half of our position and take our risk off the table, at the very least.
Yeah, love that.
And then we got a lotto ticket.
An activist in the name too. Elliott Management has a big stake. Trying to impact.
Straza, now I see why you were so excited to come into this call, because I'm now excited. You've got me excited about two trade ideas here: Boston Scientific and now Pinterest. I don't know which one I'm going to choose. They both look good.
They're very different, right?
Very different, and will behave in very different ways going forward as well.
Yeah. Let me know what you do with that BSX.
Funny side note about BSX. When I was 7 years old, my parents got divorced. Blah, blah, blah. Not a sad story. But when my mom had to renew her license plate for her car and put it in her name, they issued her a license plate where the first three letters were BSX.
Your ticker.
Totally random. And she's like, I can't have this. Like she had to go back and return. She's like, I can't have that. Like, I don't want that to like people think I got that as like a vanity plate because I just divorced my husband.
That's pretty good.
Anyway.
BSX.
Yeah. BSX.
Yeah. Put it on. I'll get along with you.
All right. Anything else got you excited? I mean, man, you got two hot ones here. Anything else?
No, but what I will say is, after the run that we've had since the start of the year, a lot of groups that I really like right now, I'm looking at, and from a tactical perspective, I'm thinking to myself, market needs to cool off a little bit. We're really overbought. Things are stretched. Whether it's industrial metals, some of these growth stocks that ripped off the lows, a lot of stuff just looks like, okay, let's back and fill for a couple of days, right?
No, I'm glad you said that because you and I were chatting on Friday last week. I was really struggling. I wanted to put a trade on. I was looking for something to put on, and every trade that we liked as a firm, all the stocks that we were bullish on, they were all either very extended, and I felt like I'd be chasing here, or they still had some more setup to do. They weren't quite at our trigger. Felt like it'd be, we'd be jumping the gun on that, and jumping the gun has bit us in the ass a little bit recently. So I don't want to do that. Meanwhile, I was also complaining to you. I'm like, well, okay, maybe I should put on a delta neutral credit spread here and just put on, it's good to have some of those on in the portfolio. And I was looking and like, there was no juice anywhere to sell premium, at least in the most liquid ETFs that I trade. So I was just like, Straza, I'm not doing anything today. It's early weekend. We're getting started. We're done.
That's the right move a lot of times. I had clients asking me this morning, and that's what happens, right? When you have one good trade, I had clients being like, oh, we missed coin. What are you watching now? It's like, nothing.
Oh yeah. You're the hot hand now, Straza. You're the hot hand. The phone's ringing off the hook.
But no, it's good practice to be able to say that, right? And be honest with yourself. We look at a lot of charts, and sometimes there's just nothing there. If we're looking at as many charts as we are every day, if there's a setup there, we'll find it. We'll be on top of it. If we're not finding something, that's big time information. So,
right. All right, we've taken everyone's time far too much than we should have. This was a great call. We had some great ideas here. Boston Scientific, Pinterest, Boston Scientific for a more longer term play, Pinterest for a more tactical play. I like both of these. I don't know which one to pick. I might have to just go with both. But either way, you lived up to your bull market shirt today, Straza. So well done. Well done. You stay handsome. I'll be more handsome next time we do this. I promise. I promise.
I love the hair. Keeping it flowing for the Flow Show. So on brand of you.
All right, everybody. Take care. We'll catch you next time.